Recently, RBI have launched a co-lending model. So it's a co-lending. From the term itself, you need to understand what is this co-lending. Means two people will be lending, will be giving loan. So here the co-lenders are, one is a bank and the other is an NBFC. Okay. So recently RBI allowed co-lending, that is banks and NBFCs, they can come together, they can have an agreement and they can co-lend to the priority sector. So the UPSC can either, because of this news, UPSC can ask question regarding what is this co-lending model, or they can ask you what is this priority sector is all about. Okay. So we'll see the news. Okay. So regarding priority sector, have an idea. Priority sector are those sectors of the economy which is very crucial to address the livelihood as well as the development of our economy. So RBI have designated certain sectors as priority sector, for example, agriculture, then micro, small and medium enterprises, similarly the weaker sections of the society. So like that, recently renewable energy have been included, social infrastructure have been included in the priority sector. Okay, so be very clear that RBI have designated certain sectors of the economy as priority sector, and it is mandatory for all the banks to give a certain proportion of their loan to these priority sector. So approximately nearly 40% of their total loan have to be given to the priority sector. And if any bank, if there is any shortfall in their loan to the priority sector, RBI will impose certain fines to them. Okay, so RBI have ensured that by having a priority sector lending norm, the banks will give loans to these priority sector. Now here the news is regarding this co-lending model to the priority sector, co-lending model to the priority sector. So RBI have allowed the banks and NBFCs to provide co-origination of loans to the priority sector. Okay, have an idea. This is in 2018, RBI have come up with this model. But recently what RBI have done is, it has revised this model and it is renamed as co-lending model. It is having much more flexibility. Earlier in the 2018 model, housing finance companies were not included in the co-lending model. But in the latest revision, in the co-lending model, housing finance companies is also included in this co-lending model with banks. Okay, so this important point you keep in mind. So in the latest, so they can ask you what is this co-origination, or so be very clear, this word is also used, co-origination of loans. What do you mean by co-origination? Co-origination, it refers to joint contribution of credit. Okay, so the credit or the loan will be contributed by both, that is banks and NBFCs. That's why it is called as joint contribution of credit. Refers to joint contribution of credit at the facility level by both the lenders. Okay, so they are not only giving loan as a joint contribution, but the risk as well as rewards will be shared by both the lenders, that is banks and NBFCs. So in the co-lending models, the basic aim of this co-lending model introduced by RBI is aimed at improving the flow of credit to the unserved and underserved sector of the economy. This is the stress RBI have given. Okay, so already unserved and underserved sector of the economy will get more credit with this model, because see, banks and NBFCs is having special advantage. Okay, banks can give loan at a cheaper rate. NBFCs is having a far more reachability to these priority sector than compared to banks. So when they come together, it will ensure that this credit reaches to the unserved and underserved sector of the economy. Okay, so by having this model, it will improve the flow of fund to the unserved and underserved sector of the economy, and it will also make available funds to the ultimate beneficiary at an affordable cost. Okay, so they will be not only getting loan, but also the aim of this model is to provide them at an affordable cost. The interest rate will be lower. Okay, because the banks can provide lower cost of funds and NBFCs is having greater reach. Okay, so be very clear. Here in this new co-lending model, the NBFCs includes housing finance companies. Okay, so what banks will do is, banks can co-lend with all registered, this is a keyword, okay, banks can co-lend with all, only with all registered NBFCs, including housing finance company, based on a prior agreement. So in the agreement, everything has to be clear. How much the bank will contribute, how much the NBFC will contribute. Okay, and one condition is that in this model, in this co-lending model, RBI says that NBFCs should be required to provide a minimum of 20%. Okay, so out of the total credit which both gives, minimum 20% of the loan should be given by the NBFC. A minimum of 20% share of the individual loan should be given by the NBFC. That is one of the condition. Okay, and there is one important point. Okay, so in the co-lending model, NBFCs will be the single point of interface. Even though the loan amount is contributed both by the banks and NBFC, for the ultimate beneficiary, the customer, the single point of interface will be the NBFC, not the banks. NBFC will be the single point of interface for the customer, and the customer will enter into a loan agreement with the NBFC only, not with the bank, under this co-lending model. So these points you keep in mind. Based on that, UPSC can ask question. Okay. Now, under the, see, it is clearly says that, RBI clearly says that this two lenders have to formulate a board approved policies for entering into co-lending model and place the approved policy on their website. So the, what is their model, co-lending model, has to be transparent, because it has to be it should be approved by the board and it should be placed in the website. So the two partner institution, based on this approved policies, will enter into an agreement, and this agreement will clearly specify the terms and conditions of this arrangement, the criteria for selecting any partners, and what type of product they will be providing to the customer, and the areas of operation. Everything has to be clear in this agreement. And based, I told you, the bank have to ensure that they have to attain the priority sector target of providing at least 40% of the total loans to priority sector. So based on the loan amount the banks give, under the co-lending model, the banks can claim priority sector status in respect of the share of loan they have given in the co-lending model. So how much of the loan amount the bank gives under the co-lending model, they can claim it as under the priority sector status. Okay. Now, one more condition which RBI says is that, I told you all the banks can go for co-lending model, but with an exception. Okay, even the foreign banks also can go for co-lending model, but one restriction is that co-lending model will not be applicable to those foreign banks which is having less than 20 branches. So foreign banks which is having less than 20 branches, co-lending model is not allowed. But if foreign banks which is having more than 20 branches, co-lending model is allowed for them also. Okay. In the case of priority sector, UPSC have asked a question. So since this topic is about co-lending model and priority sector, I am showing this. It was asked in the year 2013. The priority sector lending by banks in India constitute the lending to. They are given agriculture, micro and small enterprises, weaker sections. All the three are there. So answer will be D, all of the above. A, B and C are correct, means all the three are correct. So the answer will be, there is a choice called D, all of the above. So this type of question also UPSC can ask. Okay. So this is the news is all about. Just have an idea what type of question is also being asked. That is also very important. Thank you.